Hi, this is Charlie giving you Thursday's video. This is my second run. I just did a 9-minute video and realised I had my mic on mute. That was fun, wasn't it? Let's start this one again. So today I'm going to be talking a bit about sentiment with regards to the markets. I'm starting off with Bitcoin here because I was doing a webinar for an external company yesterday, and a lot of their followers are highly interested in Bitcoin and the cryptocurrencies. And it's quite interesting that what I pick up on is that there's still a lot of positive sentiment in the wider investing public towards Bitcoin and the cryptos, and that to me is a bit of an issue, because when you've got the vast or a large portion of investing public who are bullish on a market despite it coming down, it probably means it's going to go lower. It's just the way things work. The markets need to flush traders out. They need to flush people out before a market might go back up again. That's if Bitcoin goes back up again. So at the moment, Bitcoin's been coming down over the last several months, over this past year. We could see it was in a bubble phase late last year when you've got people remortgaging their houses and stuff to buy into Bitcoin. It was just crazy what was going on. But I suspect this market is not done yet. It can bounce around, of course, over the weeks, but I suspect that overall it's probably not done enough yet. A market's job when it comes down is to get people to a point where they are sick of it. And what I'm seeing at the moment is too much positive sentiment towards it, so I don't think the wider investing public are sick of Bitcoin just yet. And all the time they're not, then it leaves the doorway open to lower prices. Okay, so and whilst we're talking about sentiment, we're going to go on to some other things. So we are going to now move over to, oh yeah, so for example, I was doing a webinar several years ago, if I take us out to a monthly chart, for a similar group, and a group of investors back then. And you know, when a market's probably not going to go in the direction of what those investors want, because they start abusing you. So yesterday, you know, I wasn't getting abused yesterday, to be fair, but they're still highly bullish towards Bitcoin. But I remember back in 2011 or 12, it was somewhere around about this point in gold. This is a monthly chart of gold. I was doing a webinar for an external company again, and they all wanted to know about gold because gold had been going up for years, and everyone was hyper bullish on gold and thinking it's going to go to 5,000 and whatever. And so I said I think it's topped out. And I remember the abuse that I received, not abuse in a bad way, but people just saying, you're wrong, you don't know what you're talking about, Charlie. Gold has got this, that and the other, and all the reasons. They have all the fundamental reasons why gold must go to 3,000 or 5,000, whatever. And of course, at that point, I said, well, that's even more reason why I think gold has probably topped out. Because if I take you few hundred people as an example, then as a tranche, as a you know, just as a sample number, and if you're a representation of the wider investing public, then you're too bullish. There's too many bulls out there, which means this market's still got further to roll over. Because bear in mind, back then we had gold kiosks in almost every shopping centre wanting to exchange gold for cash. Do you remember all of that? And it was just such a sure sign of a top through this whole point over here through 11 and 2012, etc. And then probably once we went to 2014 or so, those probably closed up. But anyway, so sure signs of a market top using sentiment like that. So that was a great example. It was probably one of the best examples I've ever had of dealing with traders or investors, and when they were getting saying, no, you know, you're completely wrong, and they're so enthusiastic about something, you know it's probably going to do the opposite. And anyway, let's now take it to another part of sentiment, which is if we take us to the pound dollar, and just bring us down to a daily chart here. Now the pound dollar has been coming down. It's done something like 1,700 pips down from these highs in April, and I'm bearish on the pound dollar. Having said that, even the newspapers have started commenting On the pound dollar, just over the last 24 hours or so, Sky News, pound falls to fresh 14-month low against the dollar regarding talking about Brexit, no Brexit, all that sort of stuff. We've then got Business Insider, the unraveling pound is on its worst run since the financial crisis and it's only going to go downhill. So there's another one. I think I've got another one here somewhere as well. Where is it? And then we've got Business News here in the Telegraph. Sterling has its worst run since the crash. So and that's just a few. I think the Daily Express had some stuff going on there as well. So when I start to see the journalists talking in a way which is highly bearish, then again, I know that we're probably getting close to a low. It doesn't necessarily, it's not like, 100%, you can't time it exactly, but we're probably getting close to a low. I'm not talking, I am bearish on the pound, but so I'm not talking about a major low. I'm just talking about, we're probably close to a bounce point, because when you start getting, whether it's investors at a bigger level, or you've got markets making headline news like we're getting there in the paper, in the press, then it usually means whether it's highly bullish news, then it probably means it's topping out, or if it's highly bearish news, it probably means it's bottoming out. Don't get me wrong, I think cable's got more downside in it, but it just is a slight warning that it could be getting close to a bounce zone down here somewhere. Anyway, so there you go. So a little bit on sentiment today, and hopefully that's of use. I shall see you tomorrow for a live trading video.